So, from chaos to control, financial and operational systems for consulting growth, I'm really excited to host Craig Levin, founder of 3D Consulting. For those of you who are listening to this on the podcast, I'm just going to go ahead and read Craig's bio just to save time. And of course, we want to get into all the nitty-gritty. So Craig Levin is the founder of 3D Consulting and a seasoned CFO/COO who has led finance and operations across Fortune 500 companies and fast-growing startups with a background in CPG, manufacturing, retail, and distribution. He's known for building high-performance finance teams, streamlining operations, and guiding strategic growth. Craig blends deep financial expertise with hands-on consulting experience, and making him uniquely equipped to help consultants build resilient businesses at scale with confidence and control. And for those of you who don't know me, my name is Faheem Moosa. I'm the founder of Consulting Leap and the host of this show, Consulting Growth Hour, where we meet every 2 weeks and talk about a different topic with respect to consulting growth. So I'm going to hand it over to Craig. Craig, you can add to that introduction or not, but I want you to. I'd love to, get your perspective on, because you've had a varied career, right? So you could, let us know what your background is, if there's anything more to add, and then we'll just get straight into it.
Absolutely, and I'll also talk a little bit about how you and I met and engaged. I apologize if my dog is already acting up a little bit in her crate, so hopefully won't have any interruptions from her. But hey, I wanted to tell you first that my experience has mostly been in corporate America, in Fortune 500 companies, and I'm from the Seattle area, and I went to the University of Washington for my undergrad degree. And after getting out of the business school, I immediately started working in corporate America. And it was, I went to work for a wireless cellular company that then became Verizon Wireless. And I actually did about 20 years in that company, and that's where I learned pretty much everything that I started my consulting career with. And so it's interesting because big business best practices in finance and operations, they do translate in a big way to even small businesses. It's still, there are a lot of little differences, but things that we'll talk about today are things that I learned in Fortune 500 world and applied to small businesses. So my experience in the corporate world got me wanting to found my own business and start serving clients the way that I wanted to. So in the corporate world, I was a very small cog in a huge operation. And I always had that dream that I wanted to flip that and be a bigger piece of bigger fish in a smaller pond, let's say. I'm sorry, excuse me 1 second. My dog is really having an issue. This is a little bit embarrassing, but I want to just clear this up. So hang on 1 second.
No problem. Do your thing. We want you here fully with us, Craig.
Okay, that was quick. Okay. So and while I was in corporate America, the finance guy always kind of hears things first about things like upcoming layoffs and organization reorgs and things like that. And so at the point that I had been in the company for about 20 years, I started to hear little inklings about, consolidation, and I was in the headquarters group of Verizon Wireless. And so I decided to kind of preempt getting laid off, and I left the business after being there for 20 years. And as some of you know, because I have some experience, some past history with some folks on the call today, I I became the CFO and the COO of a small business it was doing about $2 million originally. And when I left 5 years later, it was doing 20 million in sales. And that was a legal cannabis business in Washington and Oregon. And so basically it was a lot of fun. It was a lot of good experience. And it was, an eye-opening experience for me because in corporate America, I didn't do any of the administration of a small business. Somebody else did that. I worked with spreadsheets and budgets and presentations. And when I got into the small business, it was me administering a lot of the things for the business, leasing vehicles, buying machinery, all those kind of things. And that was exciting for me. But after a while, after about 3 or 4 years in that business, a lot of competition entered the market, and margins, fell off a cliff. And I started to think about the next thing that I should be doing. And I'd always had folks, working for me, and in a lot of cases working above me that I was reporting to. And I decided that I wanted to serve clients the way that I wanted to. And to put it bluntly, it's like I didn't want any people. I just wanted to be self-employed and just have it be me. And so that's kind of how I founded this business. When COVID started, and the COVID lockdown started in 2020, I left that business and didn't have any clients yet. Okay, but thankfully, my wife is a residential real estate agent and had the best year in her 20-year career in that first year of COVID lockdown. Everybody was selling their house, everybody was buying houses. And so she essentially made the investment in me that carried me from, a regular paycheck to kind of hunting for my own consulting business.
That's awesome.
Okay. Yeah. And then, shortly after I met you, Faheem, on LinkedIn. And I think that was, middle of 2022. And at the time I was struggling. I had my initial attempts at building my consulting business were pretty lackluster. Okay. The first thing I did was I sent out an email to, 100 of my closest friends and business contacts and said, hey, I'm out here. I'm not working with a company. I'm self-employed. If you need anything finance or operations wise, contact me. It was not a very good pitch. Okay. There was no offer in there. And I was not really explaining, the pains and the things that I could resolve for folks. And so I did pick up one client, however, and actually he's on this call, and it's Lance. He has a great consumer packaged goods business. And hey, Lance. And so we worked together to shore up his bottom line and really understand his unit economics. But that kind of got me started. And then a few months later, I did get my first monthly retainer client. And then I added another one and basically got to that point where I replaced my corporate paycheck with the work that I was doing. And that was my first mini goal. And at that point, I made the decision to invest in increasing my revenue. And I, thought there were times that I thought that I knew a lot about consulting in that period. And there are times that I thought I knew nothing about consulting. And when I hooked up with Faheem, that was when I thought, okay, I really know nothing about consulting. He was
you're too kind.
So yeah. Faheem taught me about quite a few things fundamental in the business and got me started. And from that point, I was able to basically add another paycheck on top of the business that I had built. And then we engaged for a second year, and I did that again. And so at that point, I was in, he talks a lot, Faheem, you talk a lot about the peaks and valleys of consulting and that cycle. And I was at the, kind of at the top of that and earning more than I ever had in the corporate world. So it was a super exciting time, and pretty much my business since then. It's been 4 years now, and I have the same clients that I did then. So it's been, thankfully, knock on wood, very stable.
Great. So, working with you has been great, Craig. And I wanted to, say this at the beginning of the call that, you and I have a working relationship, or had one. And, you take a lot of action. That's probably why you've gotten some great results. But I want to dig into a lot of things that you said, Craig, and just I want everyone to know who is on the call and listening is that I haven't reached out to Craig just because he's been a client. This is not about that. This is about his expertise and his knowledge in finance and operations, which I've learned quite closely. And he's had some great experiences, which I wanted him to share with this group. I just want to go back to a few things that you said, Craig. When you quit corporate America and you started a CFO role at the small business, and you took that business from $2 million to $20 million, right? I think that was a legal cannabis business. Okay, it's not consulting, but still, it's a small business. And let's just start over there. So could you share with us a few points about, from a financial and operational perspective, like that kind of growth, grew 10 times. What are some of the some key insights that you feel would be relevant for us listening on this call today in terms of
Absolutely.
growth and scale?
Yeah, yeah. So that business had, when I joined it, it had about 20 employees. And when I left it, it had 80 employees. And it had expanded into additional legal states. And I took an approach that I take with when I onboard clients in consulting now as well. And that approach is building the systems that are needed to scale the business. And I always start with cash and budgets. And then I move to reporting and metrics. And so these are the structures and the systems that a small business and even a self-employed or very small consulting business need. And the cash and the budget part, those are kind of the planning stage. And the reporting and metrics, that is the results watching and decision making pieces. And so many businesses don't have these structures in place. I talk to a lot of lenders, and I talk to a lot of bookkeepers and accountants and tax professionals. And I joke with them and say, hey, what percent of your small business clients do you think, or do you know how to use budgets or do any kind of planning? And they're like 10%.
Mhm.
Sometimes I'm like, oh, that's high, that's pretty good. But it's, people are winging it for the most part. And I think that's, that was a situation that I came into in that small business. So even though it was, that business was founded by a sales executive from Microsoft and a engineer from Boeing who came from process-driven organizations, in this small business, it was a mess. There really was no structure. And so putting those structures into place is what helped to scale that business. And if you really think about it, once you start adding people, you can't run a business from the ideas and the plans that you have in your head. You have to be sharing. There's some transparency and there's teamwork, obviously, and there's people who need to be accountable for things. And so how can they do that if there is no plans or documentation of anything in the business, and everything is just transactional and one time. So the cash and the budgeting is so important at the beginning because cash is the lifeblood of the business. You don't start a business by figuring out what your how your metrics look and looking at building out financial reports and graphs. You start by investing some cash and then generating organic cash flow, and that is the lifeblood of the business. And so this is something that you always need to be carefully managing in order to sustain a business. And some people are great doing that, in their head. These other 9 out of 10 business owners who are not using these systems, how are they doing it? Well, they're not all failing. Many of them do it very adeptly, but if you're going to share it with people and be transparent with your team and get buy-in and get that accountability that you need from empowered team members, you need some of those. You need
Right.
those structures.
Right. Craig, I just want to get a little tactical here. I'm curious about these four things you mentioned: cash, budget, reporting, and metrics. And as a former CFO, your insights on how you kind of use these factors in managing and running a business. That I'm curious about that. So when you say cash and budget, what are you looking at? Are you just looking at the daily cash that's available, or the bank balances, like and then in terms of budgeting, can you elaborate on that?
You bet. You bet. Um, so the environment that I think is best to build a cash forecast and a budget in is Excel. Okay. You can do this very simply in Excel, but the point is that you're kind of moving your plan from your ideas and your strategy onto paper. And a cash forecast, for example, one that I do for myself in my own consulting business is I bill by the month, and so I have all of my clients and each month and the amounts that I'm going to earn from these clients each month. And then down below, of course, I've got my business expenses, and ultimately the net cash that comes out of that is what pays my mortgage and my chat GPT subscription and whatnot. And so getting it on paper is a system for me that works in business and in my personal life.
So
And
how
when you want,
far? So, sorry, Craig.
yeah,
I'm just curious. How far into
sure.
the future do you forecast for your consulting business?
So personally, I do it monthly for a year, and I just keep kind of rolling that forward. And what I suggest for businesses is that based on the frequency of their transactions, you either want to do it by week or by month. And in some cases, I worked for a short time for a business that we were doing it daily. So they had a lot of transactions and they were hovering around the 0 point, zero bank balance point. And so that kind of translated to doing it on a daily basis. So it really depends on the stability of your business and the cash buffer that you have and how you bill, how often you do transactions. And a cash forecast ultimately, you want to make sure that if you're ever going into the negative, that you've planned for that ahead of time and you've got some financial backstop in place, like a business line of credit, for example.
Right.
Okay. that'll tell you the magnitude and the timing of when you should potentially take on some debt.
I've heard you talk about a 13-week cash forecast. So that's around a quarter, right? Like, is
Yeah,
that something that you recommend? Like, is it because it's a quarter? Like, can you elaborate on that?
absolutely, absolutely. So I do recommend that. That's the most common approach for businesses, and this is, it's a rolling forecast, so that if I start it today, I want to look at the next 13 weeks by week. And then every week that passes by, I overwrite my forecast for the week with my actuals for the week. And so I go onto my online banking and I see all my transactions, and I say, I paid this rent, I paid this amount for subscriptions, I had these bills, I received this income. And then I tack on another one all the way to the right. I tack on another week. So this one that's passed by, I've already got the actuals, and it's basically telling me at the bottom line, after all of my income and all of my expenses, what I should expect my bank balance to be. Okay,
Right,
that's the gist of the cash forecast is,
right,
what's my bank balance going to be each week for the next 13 weeks based on what I know today and the trends of my business.
right. I can, you mentioned that 9 out of 10 small business owners don't do this, and I can sense why, because it sounds like it's a lot of work, right? So,
It,
um,
it can be, but I have a one page, and if anybody on this call would like to have that, let me know and I'll shoot it out to you. It's an Excel spreadsheet that fits on one screen. And it basically, I have 5 clients. And so I've got 5 lines of revenue. And then I've got a TBD line that's basically comes out of, that's my expectation out of my sales pipeline.
got it.
And then I've got, I don't have every supplier or vendor in my expenses. I call it out by marketing expense, you know, subscription expenses, those type of things.
Line items, yeah, right.
Yeah.
Um,
Yeah.
Thanks, Craig. Thanks. And I think there are some couple of people who are interested in that template.
Yes.
And we'll find a way to send it across. But let's move to reporting. Like, as a small business
Yeah.
CFO, what are the metrics you're looking at? What are you tracking? Yeah, talk us through about on that.
Absolutely. Absolutely. So, reporting is kind of interesting because, most small businesses use, let's say, QuickBooks or QuickBooks Online, which has great reporting as far as income statements go. And the primary report that I look at with clients is that income statement. And I've seen folks look at it a couple of different ways. Okay, it's kind of on a spectrum. One way on one end is, okay, I have the numbers, and nothing ever changes. I just look at it like I'm looking at the menu of my favorite restaurant. I'm going to order the same thing, and nothing is really piquing my interest. But I'm looking at it to make sure that it's accurate and nothing is going wrong. Then on the other side of the spectrum is, hey, I have some strategic initiatives that I've translated into my budget or my plan, and I expected to see an ROI, or I expected to see some upward improvement. Am I seeing that? That's what I use reporting for in a large sense. I, dive into it and get a little bit analytic about it. And it's like, okay, I planned on having revenue. I planned on making an investment, having an expense. Am I seeing the expense and not the revenue? Or am I seeing the revenue and the new expense? And is it getting more efficient over time? So I tend to look at, I look at a lot of income statements, and I tend to look at kind of 12 months revenue on top, obviously expenses and the net. And I just kind of start at the top left and I go down to the bottom right. And this is just after doing this for, my whole professional career. I have just a certain approach to how to do that. And I can tell if the incremental investments and expenses that I'm taking on in the business, if those are driving the revenue that I expected, and then ultimately the change in the bottom line that I expected.
Right.
And I use that reporting, and I suggest that other folks use their reporting to make those decisions about, okay, how am I changing with the way my market is changing? And am I gaining leverage? Am I gaining profitability, or am I now, have I expanded my business but seen my bottom line shrink? Which a lot, happens a lot. If you start to take on employees too early, and you start to take on, tools and subscription costs and all these things that you have, that you've wanted in your business, but they're not producing any return, that's where you're going to see it in your reports and in your metrics, which are mostly unit economics and activity, kind of, dollars per activity type of metrics. And those are the things. I'm super analytical. So when I look at those things, I can tell, okay, I made a change, and it either fulfilled my vision for that change, or it sucked. It failed. And when I see those things, that's when I can make a decision, to double down on it or to pivot.
Okay, got it. You said something about unit economics, and I've always been curious. I haven't gone super deep into this topic, but I know that you are, you work with some professional services firms. You obviously have a consulting business yourself. So from a consulting perspective, how do you see unit economics? Because there's no cost of goods sold, or I mean, as in a manufacturing business. So how do you view that in a people or services organization?
Sure. So, I mean, let's talk about when it's more than just me, more than just one self-employed person, but you have a few staff members, let's say. So ultimately, you've got to be driving a gross profit with folks. And so since you have normally in accounting, you look at wages as an operating expense, but in a consulting
Right.
business, I like to look at it as a cost of goods sold.
Okay, direct cost.
Okay. Yeah, as a direct cost. And so, if let's say that I charge on an hourly basis for services, if I charge $250 an hour, and I have a staffer who I pay $200 an hour, that slim margin is probably not going to help cover my operating expenses. Okay. So your gross profit is your most important in any business, really, is your most important piece. Is the business model that I've set up with my pricing and my cost structure driving cash flow and profitability for the business? If it's not, forget expanding anything, forget making some new investments from organic cash flow from the business. You need to be driving a margin. And so that's the first KPI that I look at. The other things I look at for a consulting business is growth in client logos, let's say, new logos. And then I look at revenue, like we're talking about, is what's my revenue per client, what's my revenue per team member, per employee, what's my effective revenue per hour. So I look at those revenue KPIs, and it's not just one point in time, it's over time. What is the trend, and are the activities that I'm taking part in, are those driving that up or is it driving it down?
Okay.
So in a
Um,
very simple sense.
right, right. This is great
Yeah.
information. I'm just curious, Craig, certain things that you said, and I don't know if you have the answers off the top of your head, but you've seen professional services businesses, you've been the CFO for a lot of different types of businesses. Like for a consulting firm or even just a professional services firm, um, what's that margin that the grow what gross margins should people be aiming at? Now, I know this may sound like a, how long is a piece of string kind of question, but is there like a range or even a target for this?
So it a couple of things to say because that is kind of it's a big topic. Um, when I was running, let's talk for just 1 second about when I was running the consumer packaged goods business, that cannabis business. When I started, our model was to do a standard type of markup, which gave us a 50% gross margin. And that supported our fixed expenses and we were making money hand over fist. Okay. And then in the early days, when I left that business, although our revenue had shot up, 10 times, our margin was across all of the different SKUs that we sold. Our blended gross margin was about 23 or 24%. Okay. It was really just enough to cover our growing fixed expense nut. Okay. And so that changed significantly over time. And we had to make choices based on that. For a consulting business, I think that it needs to be even higher. This is consulting businesses many of them are specialized boutique businesses that have to be, it has to drive ultimately a good return for the owner. And so somewhere around, upwards of 50%, maybe 60%, 65%. So I look for a high margin because it's low volume. I don't expect that a small business consulting firm has, they don't have 100 consultants. They might have two or three. And that's kind of my goal, is to have two or three and to bill something high enough that I'm doing about 65% gross
Right.
margin.
So that's revenue less your direct cost, which is your consultants on the
Right.
engagement,
Right. The
right?
people who
Now,
are on my payroll. Right.
right. All
Exactly.
right. And so what about like again, I mean it's a vague question, feel free to decline, but revenue per client and revenue per employee, I've heard these metrics before. Are there benchmarks for these types of metrics for a small consulting firm?
Well, I mean, revenue per client is something that I really started thinking about when I was first engaging with you, Faheem, because when I started the business, I was way undercharging. Okay, I really didn't benchmark against other folks. Um, and I kind of had this original feeling like, who's going to pay me for doing a budget for them or doing a cash forecast? They can do that themselves. Okay. Well, no, as it turned out, people really value the giving their financial kind of given the financial responsibilities and tasks to somebody else. Okay, it's like, please outsource this and I will, pay a lot for that and it'll help drive my business forward. And so it's, so I recommend to folks and a lot of people who I mentor for consulting, they tell me, oh, this is how much I'm gonna charge. I say double it. And because I've seen kind of what the rates are out there, and and they offer very specialized professional services. And so I'm kind of bullish on, charge high prices, drive a large margin. And so at the beginning, like I said, I was not, I didn't know how to price my services, and I was not charging enough. That was,
Right.
and so with each client, what I ended up doing was each incremental client, I started just raising the monthly retainer price on each of them. I was selling the same package, but each additional one I just added to.
Right, right. Yeah, and pricing is such a strategic topic, right?
Oh, yeah.
There's so much that goes into pricing, your specialization, the type of market you choose, how underserved it is, and so on. So yeah, so just moving on to the you mentioned that you've obviously gone through so many income statements and financials of an organization. What do you see, like, apart from the stuff that you've already talked about, like um, the pricing issue and so on? What do
Mhm.
you see where you can tell there are signs of an imminent breakdown, and what should people watch out for? uh, Beyond the usual stuff, like, there's expenses are super high and there's no clients or whatnot, are there subtle um, nuances that you look at in an income statement that tell you that, look, this is not looking good?
Yeah. Yeah. One of the biggest things is the um, kind of the labor percent of sales. Okay. So I always look at um, financial statements in terms of, I look first at what's the labor load. And in some industries, and a lot of consumer packaged goods industries, for example, it might run 12 to 15% of sales because
Okay.
you've got a lot of cogs. Your cogs might be your direct costs might be 60%, of sales. And so I look at the labor load and how that's changing over time. In other words, if people are adding labor expense to their expense base, but they are not commensurately raising revenue, then then I suggest to them that they start taking some of those responsibilities back onto themselves, especially in small businesses with small teams. If I'm running my business and God, I wish that somebody would do my sales. I want to stop doing sales. I'm going to hire a salesperson. And then I'm not getting, I can tell over time looking at a financial statement, am I leveraging that investment for more return? Or in a lot of cases, I'm paying 100,000 or more in labor and commissions, and my bottom line is shrinking because my revenue is not growing as much as I had hoped.
So labor load is that includes the consultants on the team, or is it just um, the admin folks and sales and marketing and stuff?
Everybody who you're paying, I would
Okay.
say. So you're
Okay.
making investments into kind of building your team and outsourcing your own tasks as the owner to other folks. Okay.
Okay.
Or delegating, I would say. Outsource, I don't want to confuse it because outsourcing is something else. But if I'm delegating sales and administration to other people and I'm paying for that, and my bottom line starts to shrink, then I have to make a decision. And to grow my bottom line again, I need to either see a major improvement in revenue with the same expenses that I have now, or I've got to reduce expenses and I have to start to integrate and take back those responsibilities. So you've probably seen in a lot of consulting businesses people who start on their own, they're making good money, they add a few people, and then all of a sudden their profits shrink.
Yeah.
And hopefully you're in that cycle where you cross over a line where your profits start to grow again
Right.
with leveraging those people. But what if they don't? What if it doesn't? So you have to then start, doing that stuff again.
Yeah.
And in a lot of cases, it's sales.
Right. So this is a good segue into what I wanted to talk next about roller coaster income, right? Like when you talked about your forecasting method, for you, you've got clients and retainer, Craig, right? So I think to forecast revenue, it's easier, but a lot of consultants are on project-based engagements. They have clients for like 6 months or 8 months. Then there's the client goes away, you got to look for someone else. And this roller coaster income is so synonymous with consulting. From a sales and marketing perspective, when I talk about roller coaster income for consultants, like you said, I the answer is sales, right? The answer is building a conscious sales pipeline, marketing systems, et cetera, et cetera. But from a financial perspective, like to ensure that you know you're able to wade through those roller coaster periods if they come, and if they're if you suddenly find yourself in the middle of that lull or that trough, what are some of the precautions that you um, suggest that consultants take?
Yeah, no, it's a super question. And I know you're always talking about in your content, let's say, about that cycle, that peak and trough cycle. And it's completely plausible that if you go through that cycle a lot, or even if you have the nature of your business is seasonal, it's plausible that in a 12-month, in a 1 year cycle, the money that you make in 3 months or 6 months can carry you for a year, but only if you don't spend it all when you're at the peak. And so, if you are managing like a lot of folks do by what's in my bank account today, and you're at the peak of that cycle, and you decide, God, I've always wanted this Corvette or whatever, and I have enough money in my account, I'm going to go ahead and splurge on that. And then you go into the trough. That's where trouble begins, right? And so this cash forecasting approach, that's the approach that you can take to beat that and make that 6 months of revenue in a 12-month cycle, make it last. Now, personally, like when we talk about 6-month projects, or billing by the hour with clients that their business goes through cycles, what I suggest doing is being very conservative in forecasting. I'm going to have this much revenue each month from this project or from this client, and just stack those up and stack up your revenue over the next 12 months based on the intelligence that you have about how long that project is going to last, and how many new clients are you going to get out of your pipeline. And don't lie to yourself about it. I am, of course, because I'm a CFO, I'm conservative about it, right? I assume a worst case scenario or close to a worst case scenario. And if that worst case scenario takes me into a negative, position in cash, then I have to do one of two things, or both of them. Number one, I mentioned before, get a financial backstop in place, get a line of credit that you can draw on in that trough if you need to. Okay, because you've always got to, you have to make payroll. You have to pay your mortgage, let's say. Okay. So a line of credit, and then of course, just start running. Just start, when we talk about how much I expect to get from my pipeline, if it's not enough based on the last 12 months trend, and I'm being real honest with myself about how much I can expect to get out of that, then I need to rev up my activity. And that's a place as well that a lot of my advice to my clients is more habit based. It's like, and in habit based, I'm talking about, hey, you've got to increase your activity and build that pipeline bigger and have more folks convert out of that pipeline. And so, how am I going to do that? I need to change my habits. I need to get up earlier in the morning. I need to do certain activities. And that's a whole nother realm of reporting and tracking
Yes.
metrics. Because when I was building my business up to the point that it's at, I was actually, and this is nerdy, okay, but I was like, I said, okay, I want to make 5 calls a day. I want to make 50 comments a day on LinkedIn things. I want to send a few things a day to people, and I want to meet with people like 4 times a week. And I track that stuff. And so, and that's how I overcame that kind of that fear of that trough. Okay. It's like I lit a fire under myself.
Yeah, the key to money problems is always marketing and sales, is it not?
Yeah, the sales solves that. Yep. And if
Yes,
I'm the one doing sales, I better be running.
right. I just want to let people know, if you want to ask a question, just feel free to type in the chat. We'll probably take a question or two. But I want to talk a little bit about operations. A lot of the folks listening may want to scale their business, add more people, hire, etc. So, what are your thoughts? You're fractional COO as well. So, and you've obviously talked about how you've grown businesses. So what operational systems do you suggest we put in place before hiring and scaling, your delivery?
Yeah. So mainly, I think I mentioned before that, um, when everything is just yourself and you're not scaling people, um, you know, it may not be the best use of time to document everything that you do internally in your back office. Okay. But when you start to add people, you need some processes and you need some tools that people share. So we're talking a lot about sales. So a CRM, okay, that's a big operational tool and process that you should be using if you're scaling your business and scaling your people. Okay. Um, Document management systems like DocuSign and ways to places to SharePoint and things, systems that you set up to document where save the documents for those processes, and you need contracts and independent contractor. I have an independent contractor agreement. So you need some documentation systems in your business. Then of course, a lot of people in consulting, they do time tracking and billing. I do all that stuff in Excel. I do billing through QuickBooks, but I track time, even though I don't bill on an hourly basis. A lot of people do. And so tracking time and tracking billings in Excel or in an Outlook calendar or something. These are systems that you want to set up. And
Right.
then lastly, I'd say processes, documenting processes, because everything can't just be one time only transactional when you've got other people involved and empowered to represent you in your business.
So let me ask you this, Craig. So at what point should a consulting firm think of hiring a COO? What are some of the symptoms in the business um, where you feel they should hire a COO, and what does a COO come in and do, a fractional COO?
So first, it's a good question, and it's tough because a lot of it has to do with the mindset that the owner yourself has about money. Okay, some people think that having $100,000 of retained earnings in the bank, you should be investing immediately in marketing and bulking up your people and that kind of thing. And while another person might be thinking, gosh, I'm in trouble. I need to stop the free coffee in the break room. That kind of thing. People have a different mindset about money. So basically, number one is ask yourself, have I got to a point where my business is stable and I have a powerful, pipeline or reliable pipeline? Is it big enough? And then adding to that, do I have enough cash buffer to bring on a key employee or a consultant, like a fractional COO, for example? Okay, so those are the first two things about that is, all right, is my business stable? And can I afford it? Do I have the cash buffer? And so being able to tell if you can afford it, once again, this is why the planning, that budgeting piece is so important. Okay. But I would love to bring on a fractional COO in my business so that they can kind of manage deliverables and clients that I have while I do this sales and marketing piece that I keep talking about is so important. It is very difficult to do both, and you talk about it a lot too. And what I have done in the past to forego hiring a COO is I do my deliverables at night, so I'm updating clients' forecasts and budgets, and I'm submitting stuff to their lenders and their tax people. And then during the day is when I have conversations with prospects. And so it's kind of, and I have email boxes all over the place. And so I'm communicating with people back and forth on email during the day. And then at night is when I actually do the real work. Now, I would love to have a COO who could manage that work and, procure even some fractional accountants and things and
Right.
finance people to do those deliverables.
Right. And I'm really happy to hear that because, you said that you want a fractional CFO to come in to your business and you focus on sales and marketing. That's music to my ears, right?
Isn't that crazy? Yeah,
Yeah,
I'm a finance
because
guy.
you're an operations guy, you're a finance guy, and usually a consultant will want to do what their functional expertise is and then not touch the other stuff, which is sales and marketing.
Yeah,
But this is a great mindset shift. I always, tell people that yes, you're not when you're a consultant, you're not a subject matter expert. You're a salesperson selling consulting services.
that's
So
right.
you've
Right.
got to make that mindset shift. We've got a question from Ari, but before we go there, just one thing, Craig, how do you think about reinvesting in your business? Like what are some of the things that you think about when you want to reinvest? Like how much to reinvest and when to reinvest? Just enlighten us
Yeah.
on that.
So it kind of dovetails with what we were talking about with investing in a fractional COO is, I think, am I stable? Do I have the cash buffer? But then what I would say is key is knowing when you're taking on an expense and you're making an investment in your business, uh, having a vision for where you would see the return and how big that should be. So that when you make the investment, and for us consultants, it might be in training or hiring a consultant ourselves or adding some software tool that's going to enable us to do more for clients. Um, have an idea of, okay, this software platform, I subscribe to a software platform for budgeting and KPI management, things like that costs like $700 a month.
Which one is that?
It's called Giraffe.
Okay.
Okay. It's basically a financial planning and analysis software platform. And so, in doing that, the reason I did that was because I thought, okay, I've reached the I've reached the point where my own document management, updating everybody's cash forecasts in Excel and doing these things got to be the version control and all that stuff got to, and best case, worst case scenarios and the cash flow that goes with each of those got really, it became a bear. Okay. So in order to, I kind of reached the capacity, my full capacity. And so to increase my capacity, that's a really good reason to make an investment and start to reinvest in your business. To increase my capacity, I took on that subscription. Okay. And when I started working with you, Faheem, I thought, okay, um, I have a cash buffer. I've got to the point, kind of my capacity, my personal capacity, what I know how to do. I've done that, but I'm missing something. I need to go above and beyond that. I have a cash buffer. I'm going to invest in training and consulting. And I got trained and consulted, and I, turned that around for a 5x return.
Awesome. So yeah, what I say to people is that, like, when you look at your business and look at all the systems in your business, you've got what, finance, operations, HR, management, sales, marketing. The first place to invest is in your marketing, because if you can't increase your marketing, is going to increase your revenue, marketing, and then sales. Sometimes it's together, depending on your business. But that's the first place the first system that you institute, because you've got to get more customers and more revenue in, and then all the other systems will be relevant. Otherwise, you just can't pick, let's say, operations when you don't have customers. So that's the way I look at things. I'm going to read out Ari's question. So Ari says, when you sell on retainer, how do you think about this operationally or in terms of time usage for both the client and internally? So Ari, would you mind coming on and clarifying, please?
Yeah, just that balance, right? It's a balancing act between providing service, giving service, and then managing that, just like the question said, operationally or in terms of ensuring profitability as well. As we know, some clients might want to take more time or maybe have certain expectations. So maybe that's done on the front end in terms of road mapping that, in terms of expectations and that sort of thing. But um, yeah, just in terms of, implementing retainer, in our business, we've that's something new that we're now considering.
Yeah, it's really strategic, and it's tough. I've had some challenges delivering on the vision that I have, but ultimately, the way that I work is that I kind of have 8 hour a week slots for clients. And so if I have 5 8 hour a week slots filled, I'm kind of working full time. Okay.
Mhm.
And I could go into stories about how that's really more than full time, or in some cases it's less because the billable hours are kind of consolidated. But the decision on what to charge for a retainer and how to split my time between clients, I don't work for somebody every Monday, because they have needs throughout the week and they consider me their CFO.
Mhm.
And so I I basically say I'm going to give you 6 to 8 hours of work per week, and these are because it's long term, repeatable, consulting. It's not project based where there's a deliverable that's finite and you're going to charge this much for it. So it's kind of, people, what I've found is that people really respond, buyers respond to, they always kind of impute, okay, how much am I paying this guy per hour if I'm paying him this much a month and he's giving me a fifth of his time? And so that's what people keep honing in on. As much as I try to get them to deliverables and things, that's what they hone in on. I don't send a log to them saying, here are the days and hours that I worked. It's just a handshake agreement.
Mhm.
But that's kind of how I split my time and how I kind of put the retainer into perspective for clients. And I originally had this vision that I would work with clients for 6 to 12 months and then move on to another client. But what has actually occurred is I've worked for them for 4 or 5 years, and I've kind of become almost a part-time employee. After I set up the systems in the first year, then I had this vision that I would give it over to them and they'd have the tools and the know-how. But in fact, they'd rather just ask me, what'll happen if how much more in sales do I need to do to hire a salesperson, and put it through your model and tell me. And they like having me around. And so it's, things have morphed from the original vision, and it's a little cloudy, but ultimately the retainer system has worked really well for me.
Right. And yesterday you were telling me, Craig, that for every one of your clients that you ever worked for or ever consulted with as a fractional CFO, wanted you to join them full time, which is amazing. It's just testament to how good you are as a fractional CFO. So Ari, do you have any follow-up questions on that?
Yeah, I was just going to ask, have you attempted to scale that? So maybe then you're creating the demand and now you have other consultants and you're offloading some of that capacity to other consultants. And that, of course, that complicates the calculations in terms of ROI and all that. But if you've facilitated 8 hours per week, if you can kind of hit on that a bit.
Yeah. So for a couple of years, I had an associate who was working on an hourly basis. He's another fractional CFO, and so he's got his own things going on the side. And I was one of his engagements where I was using his services to help serve one of my clients, and they loved him, maybe even more than they loved me, right? So so it was great. He was kind of like a mini me. All right. So he was doing things for them. And what I've learned since that engagement, and I ended that engagement with the client after about 3 years just recently. And what I learned in that is that I need to find somebody or have somebody do things in the engagement that I don't want to do, so that it's complementary and we're not crowding the same lane when serving a client. And so there's little minute challenges that come up in that. But the vision was, I'm going to hire a freelancer, which is flexible for me and enables me to leverage someone else's work for profit. And I did that successfully. And so there are times, I was talking to Faheem the other day about, I want to kind of go through another growth. I've had the same stable of clients for years, and I want to add a few, and I'm going to go against my old vision and start working with people again, and in my organization, right, and employ people and be their boss. So I'm going to be doing more of that in the future to leverage someone else's work, which is what business is all about.
Yep, absolutely. Thank you.
Thanks for the question, Craig. I appreciate it.
All right. So this has been great, Craig. Thank you so much for sharing your wisdom. If people want to get in touch with you, where do they find you?
So my business is called 3D Consulting. That the 3D stands for 3 daughters, not 3 dimensions. And so it's 3dconsultingco.com. I'm on LinkedIn. That's where I do most of my communications. I don't know if anybody's really looking at my website, but you can see me on LinkedIn and on 3dconsultingco.com, which shows a lot about the approach that I take to helping small businesses scale.
All right. Thanks again, Craig. This has been so enlightening. For those of you who want to check out the replay, go to bit.ly/consulting growth. That's the link to join the Consulting Growth Hub community, where you'll find another bunch of consultants who are all there to help each other, and you'll see replays to all of these sessions, the Consulting Growth Hour sessions. So that's bit.ly/consulting growth. Thanks again, folks, and I'll see you all on LinkedIn.